Tony Virtue speaking, Virtue and Partners, and literally just back off a plane from London, and I left with one Prime Minister, came back with another. Now 10 years since a Prime Minister's gone full term. We've got to go back to John Howard. What that means is that for any voters under 28, they've never known a Prime Minister who they voted for to go full term. That's about 20% of the voting populace. Look, a straw poll out there's a lot of disengagement, etc. there, so we'll leave that for others to comment on. At a market point of view, the actual information from markets been actually quite strong, and as you can see from the attached graphs, the GDP came in at 3.4%, which was quite a lot better than what the market expected, and the best of all of the G7 countries there. So we keep going on about how well America's doing. Well, we actually knocked them off for the year. So, we have this kind of a capacity to do ourselves down, but, there's a lot of good things to see out there. Unemployment at 5.3%. We've got RBA rates at 1.5, the lowest in living memory. That's now gone for 21 months. And, in spite of everything, this is probably as benign a market as I have dealt with in 30 years. So we need just to keep this in balance and be grateful for the positive things that we see. The actual earnings for the year that just completed has been quite strong. Record dividends that you'll see coming through, and associated franking credits. So we need to stay fairly positive about this, and we do tend to sort of push ourselves down a little bit. But overall, the economy is in pretty good shape. Turning to international markets, both Amazon and Apple for a short period broke $1 trillion. First time that's ever happened globally. $1 trillion in market capitalization. So, it's everywhere you go. As I said, just coming back from overseas, we are definitely living in a global environment. And even when we look at asset allocation these days, breaking down investments between domestic and international is becoming less and less sort of relevant. That said, we may well be due for a little bit of a correction. Those of you with a bit of a memory, go back to January, the markets did fall 10% in a short period of time. We've had a very good run. Last few days have not been so strong, and we'll just have to see how this plays out. Underpinning this has been this sort of quasi-war, if I can say, economic war between the US and China. It's something that I think we find very strange here. The graph shows that the Chinese stock market actually has declined substantially over the last few years, while the American one has continued to go up. And in fact, August exports, China hit a new record for exports to the US. So in spite of making it harder with tariffs and whatever, well, they keep seeming to be selling things to them. And eventually there's a bit of probably stage wrestling going on here. Behind the scenes, they both need each other. And don't forget that the Chinese own 50% of the US debt, so 50% of the US bonds there. So the borrower is the servant of the lender, and at any stage they can pull the rug out of Trump if they ever felt like doing that. So in addition to the fights between the Americans and the Chinese, some of those emerging markets are looking pretty rough at the moment. Our old friend Argentina, inflation up to 61%, and they're going to run out of money pretty quickly, and we'll be having to go back and borrow money. Now, at its most extreme, that's where we get civil unrest, and we've seen this several times over there. Turkey not doing so well either. The Erdogan regime there, a lot of family involved. Inflation up to 35%. They could be rioting on the streets as well. So the issue then becomes, look, does that then impact on other countries? Is there a contagion effect, or is it limited? So those countries in isolation, look, they're not going to really move the market. But foreign South Africa not doing so well. There's a few of these emerging countries that if there is a bit of a run on, that won't be perfect for us. But we've never lived in the perfect world anyway. So we tend to live with these things, and it's in everyone's interest to keep markets strong and solid. So look, that's enough probably for the moment. We're coming into a period now of reporting, of seeing clients for reviews. Things are quite strong at the moment, and we should be pleased with what's been achieved, but just keep a little bit in reserve, and who knows, we've got both state and federal elections in the next few months, and that will be top of mind for investors. But for the moment, that's enough for today, and I look forward to seeing you this time next month.